Hello, this is Paul Mampilly for the Profits Unlimited YouTube channel. And in this video, I'm going to once again answer questions that I've gotten from some of my readers. And the question that I recently received from some of my readers is, what's the most common mistake that regular investors make when they go to select what stocks to buy? Now, I can tell you from reading a lot of mail and from having now published research on stocks for regular readers to buy that the most common mistake that readers make is that they go to buy stocks that they already know. So for example, a big company that they've heard of like IBM or General Electric, those are the stocks that they gravitate to, even though there are more than 3,000 stocks that you can buy. And so people gravitate to the stocks that they are familiar with and that they know. And obviously that leaves them out of fast-growing stocks, new stocks that can go up a lot, and so they've left out of those opportunities. Another very common mistake is that readers like to focus on stocks with low prices. So for example, if a stock has a $10 stock price, they like that. However, they're hesitant or won't buy a stock with a $100 stock price. And that's because people can imagine a $10 stock perhaps going to 100, but it's a little bit harder for them to imagine a $100 stock going to 1,000. However, the truth is that the stock price in of itself really doesn't tell you what a stock is going to do. A $10 stock can be associated with a low growth business, with a bad business, and that stock can go down to $2 or $1. And oftentimes, my personal experience is that a low price stock often represents a bad business. So by limiting yourself to these low price stocks, you're often putting yourself into businesses that are quite poor and where you have actually a poorer chance of doing well. And oftentimes, if you look at what has gone on, especially with companies like Google, etc., these stocks have higher prices, $100 or even more, and have gone to $1,000. In other words, these represented fast-growing businesses with really good products and services that really gave you a much better chance of making money. And obviously, when a stock goes from $10 to $100, you're making $90. And if a stock goes from $100 to $1,000, you're making the same percentage. So what I would tell you is that focus on stocks on this basis, which is that focus on the growth in the business. And that's one way that you should select your stocks. And the second thing I would tell you is that to the extent that you're going to pick stocks based on anything, you should focus on market cap or market value. And that's because that represents the size of the company. So that what I would say is a $300 million company, to the extent it has great products and services and growing fast, can go to 600 million and then can go to 1.2 billion and then just keep doubling again and again. And that's what I would focus on when I'm going to select stocks to buy. So that's my answer to my reader's question this week. If you enjoyed this video, please give the video a thumbs up, subscribe to the channel, and share it with your friends and family. For the Profits Unlimited YouTube channel, this is Paul Mampilly.